Talk us through Delta, first of all. A beat, but I guess on relatively lowered expectations.
Yeah, I think that's fair. I mean, what Delta management couldn't do, and I don't fault them for this, but they couldn't deliver the sort of clarity that airline investors are looking for right now. We need more clarity on a solution to the government shutdown. We need clarity on the North Atlantic, which is a market that is experiencing some challenges. We need clarity on, GDP trends for the remainder of this year. As that clarity hopefully comes into view, I think that'll help, airline stocks break out of the current rut that they're in. But, Delta, wasn't really in a position to opine on those issues, nor do we expect United to have anything uniquely salient to say in that regard.
What's the biggest source of the current rut that they're in?
Well, it's interesting with airlines because the top line, unit revenue in particular, exerts disproportionate influence on share prices, disproportionate influence on valuation, more so than earnings per share do. And at the moment, demand trends, RASM trends are on the weaker side. That tends to cause airline stocks to derate. So again, we're not concerned about fuel right now. Fuel prices have stabilized, so that makes modeling a little bit easier. What we need more clarity on is the top line.
What about your picks between the three major US airlines? I guess there's quite clear different valuation differences, but with that factored in, which do you like the best?
Well, look, we recently upgraded United to an overweight rating. We have buys, overweight ratings on the big three. It really comes down to the individual investor. I mean, anybody that is uniquely bulled up on economic prospects, we think all three look attractive here. If you believe, on the other hand, that we are on a recessionary precipice, or that the government shutdown continues for a materially longer period of time, then that's going to influence your picks as well. So the answer depends in part on who's asking.
Delta CEO did comment on the shutdown, saying it's costing $25 billion in revenue this month. But this has been one of the most vocal industries about the shutdown. How is the industry ultimately going to be affected?
Well, that depends on the duration of the downturn. Delta did cite about 25 million in January, and of course January is a light travel month. So if this extends into March, we would expect that number to increase. Delta has the least exposure of the big three to government revenue. American has the most. United comes in between those two, and of course American and United have hubs in the D.C. area. So look, the duration of the downturn is going to have a big impact. We're also worried about the knock-on effect. You hear these stories about government workers maxing out credit cards just to put food on their table. Even if we were to achieve a solution in Washington, this weekend, hypothetically, if you've been put in a severe financial bind because of the shutdown, the likelihood that you're going to plan a lavish summer vacation is low. So we're worried about that knock-on effect. And then, of course, you have TSA issues, potentially compounding that.
What are you looking for United?
We think that they are going to give an EPS range for the first time for this year. We're looking for a $9 to $11 earnings range for 2019. And, in United speak, if you will, sometimes 9 to 11 means 10 to 12. They do tend to guide fairly conservatively. We are looking for a top line, revenue guide of somewhere between down 1% and up 2%. So not wholly dissimilar from what Delta afforded us this morning.